Look, let me tell you something straight, and I don't care if this makes you uncomfortable, because comfort is exactly why most people stay broke, confused, and dependent their entire lives. I'm holding silver longer. Not because it's trendy, not because some YouTube analyst drew lines on a chart, not because a headline told me to panic or celebrate, but because when you actually look at the real financial battlefield in America right now, silver isn't just a metal, it's a mirror. And most people don't like what it reflects about their money habits, their patience, and their fear. See, analysts love to talk in safe language. GDP projections, soft landing, CPI adjustments, transitory inflation, rate cuts coming soon, but what they won't tell you is this. The average American household in 2026 is barely breathing financially. Rent in major cities is still chewing up 35 to 45% of take-home pay. Credit card balances are hovering around record highs with interest rates that quietly punish you every single month. Student loan payments didn't magically disappear. They just got paused and reshuffled. Retirement accounts look good on paper but feel fragile in the gut. And people are working harder than ever just to stay in the same place. Now ask yourself something honestly in that environment. Does it really make sense that real assets should be cheap? Does it really make sense that silver used in electronics, solar panels, medical equipment, defense systems, and still treated like an afterthought should stay suppressed forever? Or does it make more sense that the system benefits when you stay distracted, impatient, and reactive because silver doesn't reward hype? It rewards conviction. And conviction is exactly what most people don't have anymore. They want fast returns, dopamine trades, overnight wins. They want to feel smart without being disciplined, and silver humiliates that mindset. Because silver doesn't move when you want it to, it moves when pressure builds quietly underneath. And most analysts won't say this out loud because it doesn't sound good on TV. Silver is manipulated not in some movie plot way, but in a structural, incentive-driven way. It's heavily paper-traded, over-leveraged, and constantly shorted because a stable, exploding silver price would expose uncomfortable truths about inflation, currency strength, and monetary credibility. And here's the part that should hit you in the chest. If silver was truly useless, if it truly had no future, there would be no need to suppress it. Nobody manipulates things that don't matter. Now visualize this. You wake up, check your bank app, your balance looks fine, but you already know most of that money is spoken for. Rent, insurance, groceries that cost 20% more than they did a few years ago, subscriptions you forgot to cancel, debt minimums that never seem to reduce the principal, and you tell yourself you're doing okay because you're surviving. But survival isn't wealth. Survival is just slow erosion, and silver, physical silver especially, doesn't lie to you like numbers on a screen. It doesn't promise comfort, it demands patience. It demands that you detach from daily noise, and that's why holding it longer feels psychologically hard, because it forces you to confront your own impatience, your own need for reassurance, your own addiction to constant updates. Analysts won't tell you this, but most people sell silver not because the thesis broke, but because their emotions did. They couldn't stand watching stocks pump while silver stayed quiet. They couldn't stand feeling wrong in public. They couldn't stand explaining to friends why they're holding something boring instead of chasing the latest rally. And that's where guilt creeps in. The guilt of thinking maybe you're missing out, maybe you're behind, maybe you're not as smart as you thought. But here's the harsh truth. Real wealth has always been built by people who were willing to look wrong before they were proven right. And pride plays a role here too, because holding silver longer isn't about proving others wrong, it's about proving to yourself that you can stick to a conviction without external validation, that you don't need CNBC or a Twitter analyst to tell you how to feel about your own money. Now let's talk numbers without sugarcoating. The US government debt keeps climbing. Interest payments alone are becoming a budget line item. Nobody wants to look at too closely. The dollar still functions, but it functions on confidence. And confidence is a psychological game, not a law of nature. And silver sits right at the intersection of industry and money. That's the part analysts conveniently gloss over. Gold gets the headlines as a monetary hedge. Stocks get the hype as growth vehicles, but silver quietly gets consumed, used up, not recycled perfectly, not replaced easily, and demand doesn't ask for permission from price charts. Demand just shows up, especially when energy transitions, tech infrastructure, and defense spending all need the same input. and yet the price stays tame, which should make you ask a better question, not why isn't silver moving, but what happens when it finally does? Because when something is held down long enough, the release isn't gentle, it's violent, and that's where urgency comes in. Not urgency to buy tomorrow morning, but urgency to think differently, to stop letting short-term price action bully you into abandoning long-term logic. Most people don't lose money because they chose the wrong asset. They lose money because they couldn't sit still. They couldn't handle boredom. They couldn't handle being early, and silver punishes that weakness mercilessly. Now imagine two versions of you 5 years from now. One who kept chasing what was loud, popular, and constantly moving, switching strategies every year, always slightly stressed, always slightly behind, and another who chose a few convictions, understood why they held them, and didn't flinch every time the market tried to shake them out. Which one sleeps better? Which one feels in control? Which one doesn't feel like their future depends on the next paycheck or the next rate cut announcement? Analysts won't tell you this either, but holding silver longer is also a statement. It's saying I don't fully trust a system built on endless debt and infinite growth assumptions. It's saying I want something tangible, something outside the screen, something that doesn't need permission to exist, and that mindset alone changes how you approach money. You spend differently, you save differently, you panic less because you're not all in on promises. You have something real, and here's the pattern interrupt most people miss. Silver isn't about getting rich quick, it's about not getting poor slowly. It's about insurance against stupidity at the highest levels, and history shows that stupidity eventually shows up on balance sheets, but not on your timeline. And that's the part that tests you. The waiting, the quiet, the moments where you wonder if you're being stubborn or disciplined. And that internal debate is exactly where the transformation happens, because once you can sit with that discomfort without folding, you start seeing everything else differently. Markets, work, life, risk, patience becomes a muscle, not a slogan. And this is where part one ends for a reason. Because the real question isn't whether silver will go up. The real question is whether you're mentally built to hold it when nothing is happening and everyone else is laughing. And in part two, I'm going to tell you what happens psychologically, financially, and strategically when the narrative finally breaks. When analysts scramble to explain what they ignored, and why most people still won't benefit even if they were technically right, because knowing something is coming and being positioned to survive it are two very different things. Now listen carefully, because part two is where the fantasy ends and responsibility starts, and this is the part most people avoid because it forces you to look at your own behavior, not the market, not the Fed, not analysts, you. See, when the narrative finally cracks, when silver stops being ignored and starts being questioned, most people assume that's the finish line. That's where the payoff is, but in reality, that's where the real test begins. Because markets don't reward being right, they reward being prepared. And there's a massive difference. I've watched people call moves years in advance and still lose money because when the pressure finally arrived, they didn't know how to act. They froze, they second-guessed, they listened to the same voices that misled them in the first place. And this is the part analysts never tell you: when silver finally moves, it won't come with a calm explanation. It will come with volatility, headlines, fear, and sudden certainty from people who were silent before. And if you haven't trained your mind during the boring years, you'll sabotage yourself during the exciting ones. Now picture this. Silver finally breaks out. Price starts moving fast, has new demand drivers. Social feeds, feeling confident, you feel anxious. Deep down, you don't have a plan. You thing in markets. Hope makes you greedy at the top and fearful at the bottom. And that's outcomes. Holding silver longer was never just about waiting for price. It was different. And if you skip that work, the move itself, American money, because this is what intersects with real life, not theory. They invest while juggling rent that's rising, health insurance premiums that quietly rates that sting, and retirement contributions that feel optional because survival feels urgent, and that financial fragility is exactly why people sell too early or too late. They're not managing a portfolio, they're managing stress. Silver doesn't fix that unless you approach it correctly. It's not a lottery ticket, it's a stabilizer. It's something that sits outside the system while the system every year. And here's the guilt trigger. If you know that, If you understand that debt and inflation are silently taxing your future, but you still choose convenience over preparation, that discomfort you feel isn't confusion, it's guilt. Guilt that you know better but act like you don't. And pride is the counterweight. Pride in saying, I don't need to be the smartest person in the room, I just need to be disciplined enough to protect myself. That's not flashy, that's not exciting, but it's powerful. Now let's break a myth. Analysts love to say, when silver runs, just sell and rotate, as if execution is that clean, but they won't tell you how psychologically difficult it is to sell something you waited years for, especially when every voice around you says, it's just getting started. This is why holding longer isn't passive, it's active mental training. You're learning to separate signal from noise, conviction from ego, strategy from storytelling, and here's a pattern interrupt you need to hear. Most people don't fail because they held too long. They fail because they never defined why they were holding in the first place. No exit framework, no risk management, no understanding of how silver fits into their broader life, just vibes and headlines, and when pressure hits, vibes collapse. Now imagine the alternative. You know why you hold, you know what percentage of your net worth it represents, you know under what conditions you'd rebalance, not because someone on TV told you to, but because it aligns with your real life, your income stability, your debt load, your time horizon. That's maturity, and maturity is rare, especially in a culture trained to react, not reflect. Now let's talk about the thing nobody wants to admit. Even if silver performs, it won't save someone who refuses to change their habits. You can't hedge stupidity if you're still overspending, still chasing lifestyle inflation, still relying on credit to maintain an image. No asset will rescue you. Silver is a tool, not a savior. And this is where self-reflection cuts deepest. Are you holding silver as an excuse to avoid fixing your cash flow, or as part of a broader shift toward financial adulthood because the market can reward patience, but life punishes denial, and urgency matters here? Not panic urgency, but structural urgency. The awareness that time compounds behavior, not just money. And the longer you wait to align your actions with your beliefs, the harder the correction becomes. Now visualize yourself during the next downturn. Layoffs make headlines, markets wobble, people panic, and you're not euphoric, but you're not desperate either because you planned for uncertainty instead of assuming stability. That's what holding silver longer is really about: optionality, resilience, the ability to make decisions from a place of calm instead of fear. And analysts won't frame it this way because it doesn't sell clicks, but this is the difference between speculation and strategy. Now here's the final punch. If you need constant confirmation to stay committed, you don't have conviction. You have anxiety dressed up as research, and silver will expose that faster than most assets because it doesn't perform on your schedule. It performs when imbalances demand resolution, and by the time that resolution is obvious, positioning is already done. And that's the cliff. Most people fall off. They see it, they understand it, and they're still not ready because readiness isn't intellectual. It's behavioral, and this is where you decide what kind of person you are with money. Someone who reacts to price, or someone who acts from principle, someone who consumes narratives, or someone who builds a framework, because holding silver longer was never about being right before everyone else. It was about becoming the kind of person who doesn't need to be early, late, or loud to be secure. And if you can internalize that, not just hear it, but live it, then whether silver spikes tomorrow or stays quiet longer than you expect, you win. Because you're no longer outsourcing your financial confidence to analysts who won't be there when your decisions actually matter.